Hey everyone, welcome to the week review. This week I'm gonna talk about the reasons why I think the significant top is coming, just reiterate everything from a technical perspective and show it to you guys. This is positioning rating, an aggregate indicator based on options positioning. And what we see here is bearish divergence relative to price. Price is equal high, and this is much lower than that. And we also saw a correction after this divergence here, which is kind of how it works. You see price go higher while positioning goes lower. Same visible here, but when this makes a higher high, it usually signals trend continuation after it corrects, like we had here, like we had here, here, and so on. But divergence as well here. But when we are at market tops, we get this 2 to 3 month divergence building up, like we had in 2021, end of 2021, beginning of 22. We also had it in before the 2020 crash. So this is why I think we kind of getting a big one, probably like 20%, but we shall see a minimum of 10% before considering anything else. And another similar thing is basically the market breadth by positioning. What we do is take all those, count all the stocks that have positioning above 0. Those are positive. Take the ones that have positioning below 0. Those are negative, and what is 0 is neutral. And same as with the other thing, we see a bearish divergence here, meaning we have not gone higher than the previous top. Same behavior we saw at the top in 2021. Same behavior we see at the top in 2020. Same behavior we see at the top in 2019 for correction in 2018, sorry, my bad. And it generally applies pretty well to catching significant tops like this. This one went for a long time. Uh, anyway, going back to here, what I like to show is also call OI. And how this behaves is in general, while the market goes up, call OI drops, and when the market goes down, call OI increases. It makes sense. Basically, as the market goes higher and higher, less and less calls are being bought because it's less likely that we go up. As the market goes down, a lot of call OI is being bought because where else can we go but up? And again, I'll show 2021, and we had this huge accumulation that we had during the crash at the bottom. This was the 2020 crash. We saw a huge put accumulation and then a huge downtrend as we went near the top. And this doesn't matter until it matters. The more call OI there is, the less the supportive flows to push price higher automatically. And it won't matter, it won't matter, it won't matter until it matters. And then when price goes down, we see more call OI being bought and the cycle begins again. Now, ever since we hit this peak here in end of 2023, sorry, we've been going down and down and down, and it didn't matter. But I think now it's time that the moment where it starts to matter, and for this to have a significant buying level, like something we saw here, to push the market up and give us a more a bull phase, a real bull phase, not just another 5%. We need price to drop, and we need that price to drop significantly, because otherwise, like even the 10% drop we saw here uh, only gave us a bit of an increase, and this is not significant enough to push us higher. We need a more lasting bottom, that like a 2 to 3 month bearish phase in which bulls give up and then they capitulate, then we actually see some call accumulation, and then we start going up again. Let's look at the liquidity as well. This is the liquidity went down this week as well. This is updated on Wednesday, so it's kind of lagging. Based on this level, we have about $10 as upside max possible in SPY. It doesn't matter we will mean that we will get it. It means that we can get it. Uh, but it can turn back down sooner than that. Uh, Now, let's look at this on the 30-minute chart. These are the opens and closes, and the wider columns are outside hours. The narrow columns are inside hours. For Friday, if we went down, I expected we would go down to about here. If this doesn't hold, we go down to about here. We did this whole move. I thought we would not do it intraday, but post-market, like we would drop here, close here, then have another recovery post-market. But we did the whole move down and then went all the way to the high of the range in hours. So kind of volatile market, and it's hard for me to read at this point. Now, assuming we go down, I would expect that we don't do any kind of movement pre-market. Monday will be a public holiday, so it's closed. So I would expect we could just chop Monday and Tuesday unless we get some event. But if we go up, I don't think it's going to be difficult to pass 565. But I think we can get a fake out, get like a close, go above 565, but then we will reverse. And when we reverse, we can still be in chop mode, but once we get outside this range near the bottom, I think it's all over and the correction has actually started. So if you want to be safe, wait until we break downside here, and it will not be a very fast drop initially. Probably we have to turn the quarter red as well. For Qs, the quarter is already red, and the month was red, I think, as well. I'll look in a second. But point is, we can go higher. Probably this would be above 570 would be the maximum we can see, and more towards the lower end of 570 than the mid end. So I have let's add another level which is 570 as well. Nailed it. Due to the inherent volatility we saw this week, I'm reluctant to draw anything specific because it's very unlikely that it's correct. But we can do something like this, and eventually we go down, we top out for a bit here a bit, and when we drop, we probably drop like a stone, go all the way here. We chop here for a bit, we go down and down again here. We chop here for a bit, and we drop. I expect that when this happens, the drops are going to be very fast and brutal, but uh, it can be slow as long as we are above this range or within this range. And there are many possibilities, like we can double this up and just do here some sideways chop and like this. It will depend on what this can hold up until Friday, basically. Like we can do this until Friday, but I think the party ends with the economic data for unemployment and NFP. And the market might front run it as well. We are in the month turning window. The price basically turns into windows, mid-month and end of month, beginning of month, and we are at end of month, beginning of month as well. So it's about the time when we should see the correction starting. And when talking about that, like I said, I would expect that we get 20%. Most likely somewhere in this range here. Let's say this was the top in 2021, which is 450, and we had a sideways range and a fake out to go above here. So between 450 and 470 would be my target. And but take it day by day. We'll see how it happens, and don't think this will be a single leg down. Most likely, it's going to be something like this. And like I said on the Twitter post, we usually bottom out just about around elections. Elections are November 5th. Let's call it November 1st. So how this should play out with the target around here, like this, is in a three-way sequence as well. So let's say something like this. We go here, bounce, have another leg down, bounce, consolidate. No, too much. Bounce, consolidate a bit, maybe bounce higher, go down again, go down like this. So it won't be a straight move down, it will be more like a series of bounces and legs down. The standard one is 3 legs down, so this is what I drew here. And each one probably like 5-6%. This would be 4%, then 4%, 6, 7. It depends. It depends a bit on which leg is the strongest. Either the first one or the last one are usually the strongest. So we shall see how this plays out. Plan is I'll start a short on Tuesday and just add to it if we go higher to 570. It will depend how we open as well on Tuesday. Yeah, that's kind of it. So expectation is of a larger correction coming. Uh, it should last quite a bit, September into October. Historically, like I said, it ends at the end of October, same as the one last year, 27th of October on a Friday. That was the lows. Uh, this one ended October 13th. Had a bounce on September 30th, and it was a substantial bounce, 5%. This one from 2020 ended October 30th. So this is the same expectation. Uh, Prepare for it. Don't stay bullish without a hedge at least. That's it for this week. Have a good one. Bye bye.